Hello and welcome to my YouTube channel, The Accounting Educator. I'm Safir Ahmed, a senior lecturer in accounting and finance in a UK university. I also work with ACCA as an early career investor. In this video, I'm covering task 2 from the AAT Level 3 apprenticeship, Assistant Accountant Apprenticeship, EPA Endpoint Assessment, Synoptic, of course. So this is from Practice Assessment 1, Synoptic for Level 3. And this task is mainly from management accounting, but of course, there are a couple of marks from the advanced bookkeeping side of things as well. Okay, now the first part is about first in, first out method, and we've been asked to calculate the value of the inventory held on 31st of January. Now, first in, first out, as you know, that the oldest units will be issued or will be sold first. So as you can see that the oldest one was on 1st of January, which is 8,000 kg. So that's gone. That's not part of that, won't be part of the closing inventory. How do I know that? As you can see that on 13th of January, 9,200 kg issued to production. So first in, first out. So that was the oldest one. So of course that has been issued already. Then on 6th of January, that's the second oldest. And we need another 1,200 from there. Why? Because in total, that this organization has issued 9,200, so 8,000 from the 1st of January, which was opening, and the next 1,200 from the next one. Now, the key thing here that you need to determine per kg price on the materials which was purchased on 6th of January. So how are you going to do that, which is total price of that transaction, which is given to us 3,440 divided by quantity, which is 1,600 kg. That gives you 2.15. And then we need to times it by, of course, 1,200 if we were determining the value of issue. But what we got left from there? So what we got left from there, 400 kg, isn't it? So 400 kg times by 2.15, which gives you 860. So we have that 860 plus, of course, what we bought on 11th of January, we still have in the inventory as well, which is 7360. So 860 from 6th of January, the value of that 400 kg, and then 7360 from this, which gives you 8220. Okay. So this will be the answer here. So using the first in, first out method, value the inventory held on 31st of January, which is 8220, which is basically 7360, this one, and then 400 from the 6th of January one. And remember, per kg, you calculated the total price of that transaction, which is 3,440 divided by 1,600, which is quantity, which gives you 2.15 per kg times by 400. Identify which of the following is the correct journal for recording the year-end inventory. So this part is from the financial accounting, preparing of financial statements unit, FAPS units, in other words. And as you know, that closing inventory, we record it as an asset. So it will be debit closing inventory as a current asset in your statement of financial position, and credit will be cost of sales, because remember, we calculate cost of sales as opening inventory plus purchases minus closing inventories. So closing inventory is credit as part of the cost of sales. So therefore, if you look at the third option here, debit closing inventory current asset and credit closing inventory cost of sales. Okay, next part. We've been given cost in relation to a batch. So as you can see that BLM and company manufactures kitchen sinks in batches of 20. In the last production run in 2017, the following costs were incurred for the batch. So we've been given direct material, direct labor, so which both are variable cost as well. And then we have variable production overheads. So this is in relation to the marginal costing and absorption costing. And as you know, that the marginal costing is the total variable costs. So you can see that we won't be including fixed production overheads, fixed non-production overheads when we will determine marginal cost of the unit or marginal cost of the batch, depending on what is required. Okay. Whereas the absorption costing, we include fixed production overheads as well, in addition to the variable production overheads and variable other costs as well. But what we don't include in absorption costing is the fixed non-production overhead. So non-production overheads we do not really include as part of the absorption cost or marginal cost. So at 31st of December 2017, 3 kitchen sinks were held in inventory. And BLM and company usually values inventory at full absorption cost. Okay. Complete the table below to show the cost per unit and inventory valuation under absorption and marginal costing. Show your answer to the nearest whole pound. So there is no decimal places required. These little things do matter in exam, so please be mindful about those things. So cost per unit absorption cost will be, so first of all, what's the total absorption cost for the batch? And remember that it's a batch of 20, which is given to us here. So prime cost, which is 980, we obviously include it. And then variable production overheads, we do include that as well. And then remember, in absorption costing, we do include fixed production overheads as well. Anything other than non-production overheads. So 240 plus 280 plus 1980, and that gives you 2,500. If you divide it by the number of units in a batch, which is 20, it gives you 125. So the cost per unit here is 125. And marginal costing, what we will include in marginal costing is direct material, direct labor, and variable production overheads. Remember, in marginal cost or in variable cost, we do not include fixed production overheads. So in other words, it will be 1980 plus 240, which gives you 2220. And if you divide it by number of units in the batch, which is 20, and that gives you 111. Now, value of closing inventory of kitchen sinks. Now, remember they told us here that 3 kitchen sinks were held in inventory. So we already know the cost per unit. So 125 times by 3, which gives you 375. And similarly, 111 times by 3, which gives you 333. Actually, this was kind of an easy part and easy marks as well, 6 marks, especially in a synoptic. Identify whether the following statements are true or false. If opening inventory is less than closing inventory, absorption costing will result in higher profits than marginal costing. Okay. So if opening inventory is less than the closing inventory, now if your closing inventory is higher, what happens is your cost of sales is lower. And if your cost of sales is lower, the profits will be higher in case of an absorption costing. And marginal costing, remember that the closing inventory value will be lower anyway, because we do not include the fixed production overheads. Yeah. So this is, of course, true. If opening and closing inventory are equal, profits will be the same under both absorption and marginal costing. That's true. It will even out. Irrespective of whether absorption or marginal costing are used, non-production overheads are not included in inventory valuation. And that's true because remember, even in absorption costing, we just include how much cost has been absorbed by the units, by the activity. So we do not really include the non-production overheads, things like administrative expenses, etc. So all of these are true. Okay. Now, this part of the question, this is in relation to, we can fairly say here that they have included the incomplete records question, and they kind of given a touch of management accounting topic as well here. So complete the table below. So by using all of this information, now as you can see, the sales is given to us, which is 3190,000, and opening inventory is given to us, and we've been asked to calculate. What is here. Show closing inventory and cost of sales. Okay, that's fine. Complete the table below to calculate how much BLM and company expect to spend on direct material and direct labor. So this part here. Now, the gross margin is expected to be 45%. Now we know that the margin is based on sales, and sales value is given to us. So 319,000 times by 45%, which gives you, so we've been given the gross profit as 1435,500. And we know sales minus cost of sales gives you gross profit, and gross profit is equal to sales minus cost of sales. And if you want to calculate the cost of sales, so cost of sales will be equal to sales minus gross profit. So remember the rearranging that little equation. So the difference between this and this will be your cost of sales. And we will need to show it in minus sign. So please be mindful about that. Okay, so 319,000 minus 143,5500, which gives you basically 17,54,500. And in relation to closing inventory, they've given us some information as well. So as you can see that they expect the inventory valuation to rise by 10% by the year end. So which means the closing inventory will be 10% higher than the 36,800, 10% higher than opening inventory, in other words. And this, we need to show it again in minus sign. So please be mindful about that. Okay, so how are you going to calculate that? 36,800 times by 110% or 1.10, which gives you basically 40,480. And now, as a balancing figure, we can calculate material labor. How? So by doing a reverse calculation. So 1754,500 plus 40,480 minus 36,800. Remember the equation of opening inventory plus purchases minus closing inventory is equal to cost of sales. And in this case, it's not purchases, but it's rather than production cost, which is material and labor cost in this case. So 1754,500 plus 40,480 and minus 36,800, which has given us the value of the materials and labor, which is 1758,180. So there was a little thought process needed in a question like this. The key thing is, in questions like these, you need to trust your knowledge and concepts, and then you can manage it. I mean, if you have not come across a question like this, then at first sight, it can be little, it can look little tricky, because you might be actually used to the equations rather than the tables that when you are working out the balancing figure. So, but there is nothing different. It's just the way they presented that is different, but it's the same technique that we are using here. Okay, thank you very much for listening, and I'll be back with other videos. Bye for now.